This is the MTPredictor weekly update for July 17th. And I've got the chart of the daily Dow that we've been watching. And we've seen the market over the last week come into our wave 4 support, which I had placed on the chart for you last week. I've got the projected wave 5 decision point resistance next. Here's your minimum wave 5, typical and maximum wave 5 up here. So we got a blue buyer's bar here in the Dow. If we do take out, this would be Friday's high, and there would be your target there, basically at 12,505 would be the long signal on that, with the target up at 12,007, I'll call it 793. If this support holds. Now, on the interesting thing on the weekly chart, I'll show you what we had set up there. You can see we had our decision point sell signal on the weekly chart. Okay, that target is down at 11,390. That is still in play, and we currently have a wave 2, or a potential wave 2 resistance right where we are currently. Alright, this being a major swing high back here where the DP is, that's why we could look at this as wave 2. We can project wave 3 down using the tools here. I'm going to use down wave 3. Okay, and there's the wave 3 targets just below the DP target there. If we look at this particular trade setup, we'd be looking for a red seller's bar, which we don't have yet, but we can see what the target be around 11,075, we'll call it. As we had a red seller's bar in here for this signal, is what we'd be looking for, a red seller's bar in this area. Tell us that sellers are overcoming buyers for the week. And then you'd be setting up your trade with a potential wave 3 down. So daily we've got support. We could be headed wave 5 up, but potentially no red seller's bar here yet on the weekly chart. So no indication sellers are overcoming buyers yet in the weekly time frame. But if that does develop in this wave 2 area, then we want to take note. And we can look at that trade setup if it does in fact set up. If not, and we take this area out and we go wave 5 up on the daily, then we'll take out the previous high there. So we'll see how this plays out. Again, the weekly is a little bigger picture there. Next, let's take a look at gold, silver, some oil, and maybe the US dollar here. Okay, here's our daily chart of gold. And you can see as we came below the 50-day, but above the 200-day, into the wave 4 support, the major wave 4 support here, got a blue buyer's bar there, and we ended on Friday right into the DP resistance. This is your minimum wave 5 target here, with your typical wave 5 above that around 1720. And so, this particular trade setup is looking something like that. With the long just above 1518, with the target around 1620. 1620 area there is the first target, though. Remember, I said we're going to have this DP resistance in the way, so we may get a pullback. We could get a pullback from here before we get another potential run up. So we'll see how that plays out. As far as silver goes, again, silver still kind of in this wave 4 range, so it is broken above the 50-day now. As it broke down below the 50-day, it's back above it, closed above it, and just above $39 there. We'll see if it can take out $40, get a close above there. If it does, then we got a good shot at testing that $50 area in silver again. That's the all-time highs. So we'll see how that works out. Let's see, oil. Well, we had a long signal, the TS4 here, that is still in play. The target is way up at 117, almost 118. But you've got this next resistance point here in oil, sitting right around 105, 105.25 area. So if this, if you are trading this, you can bring your stop up to even at this point. So if it does come back to the entry at 92.97, you can stop on that for a break-even trade. You'll have some resistance here, and then again the target is up here. All right, let's take a look. One last look at the U.S. dollar, and then we'll check Goldman Sachs as well. So the dollar, we had major support, a major low in the dollar here. We've got a little ABC pattern here, but we're also in this wave B. I'm going to project up the wave 3 on that. Oh, actually it's here, typical wave 3. We got a potential of getting into this typical wave 3 around $79 the US dollar, because of the fact that we're at this major support here. We got kind of an ABC pattern forming in here, and we'll see about if they can work their way up to wave 3. If this does break down again, here's your next major support. This decision point support area is going to be right around 72.30 area. Alright, let's just take a look at Goldman Sachs here. Let me pull that one up. Alright, our chart of Goldman Sachs, again, last summer we were in the same support area that we've come into now. We have not gotten that bounce off that area as we did. That bounce began early July. We haven't quite gotten that bounce. We're in the middle of July here. So we're going to keep watching this. If this breaks down, here's your next support. That'll come in right around 127.25 area. If it does take out the 125 area, then like I said, we could have room for more downside. And we're going to watch this as a potential leading indicator of maybe negative impact, on the Dow, S&P. So we'll see if this area holds, if they can move off this area. If not, the banks continue to fail. I think retail has still been strong, and that's kind of been leading the market, but certainly not the banks. So we want to keep an eye on that. And then finally, we'll talk about if we go back to the Dow, we look at the Dow as going up, and it appears, based in dollars, the Dow has been going up. But if we actually look at the Dow compared to real money, gold, you can see back in 2000 that gold Dow ratio peaked, where it took about 43, almost 44 ounces of gold to buy one share of the Dow. Well, since 2000, even though the Dow looks like it's been going up compared to dollars, but compared to gold, the Dow is tanking. Okay, and it takes maybe 7-8 ounces of gold to buy one share of the Dow now. And you can see, look at these, back here, if you come back here, right here, 1913 was the creation of the Federal Reserve. And you see things were pretty tame back before then, going back to 1900. You can go even further back. It's pretty tame, but once the creation of the Federal Reserve, they control the monetary policy, and you can see the big swings, more extreme and more extreme as we go here. And so, we could see, especially if this area doesn't hold as a support, we could see 2 ounces of gold to buy one share of the Dow. If this continues to be more extreme swings, this last swing here could even be more extreme, and maybe half an ounce of gold to buy one share of the Dow. But most people's perception of the Dow is the Dow has been rising. It has compared to when it's priced in dollars, but when you price it in gold, it's actually tanking. So something to keep in mind, some perspective, if you will. All right, so we'll take a look at these markets again next week. and hope you have some good trades this week, and we'll take a peek next week and see what's happening.